Okay, so we are going to put this up later for folks to watch if they want. But we'll go ahead and let Shacey get started with talking about repaying student loans and what that process looks like. And then after Shacey is done, we will have Stephanie from UniWyo joining us, and I'll introduce her when she gets here. All right, take it away, Shacey.
All right. Pardon me. So I think I can squeeze this down into about 20 minutes. It'll probably be kind of a scatterbomb situation. So if you have any questions, just let me know. I thought I'd start with just a couple of tips about repaying student loans. Your lender may be different from your servicer, which is something that a lot of people don't always realize. So they've found their lender, but that's not necessarily who you'll be paying your money to. And in order to find that out, you can find out about loans, lenders, your servicer, all through studentaid.gov, where you filled out your FAFSA in the first place. And you can also pull a free credit report from annualcreditreport.com. You can do that for free, and it'll let you know any money you owe anybody. And of course, you can always talk to financial aid. They'll be able to help you as well. So one thing a lot of people don't always realize is that student loans do capitalize, which means that unpaid interest is added to your principal balance. So even if you make your payments on time, you are still going to be paying an amount of interest that accrues. Subsidized loans, that interest is paid while you're in school or if you're in deferment, but unsubsidized loans, that interest starts to accrue from the moment that you take out the loan, even if you're in deferment, and that'll be added to your principal balance after you graduate. One other thing that people don't always realize is that if you don't graduate and you've taken out loans, you still have to pay back those loans. So as soon as you're not in school, usually the grace period is 6 months, and then you have to start paying them back. So when you get to repayment, make sure you're taking advantage of any benefits that your lender or servicer provides. Like usually you get 0.25% rate deduction if you sign up for auto debit. And different companies have different other benefits that only takes a few minutes to ask them about or look on the website. Every year when you're doing your tax return, you can submit the form 1098E, which can come to you in the mail, but it's also available electronically, usually through your servicer. And it'll allow you to claim the amount you've paid in interest on your student loans, up to $2,500, depending on your income. And of course, don't forget your exit counseling when you do leave school, because else the school can hang on to your transcripts and you'll have paid all that money for nothing. So, hope we're not going too fast. Let me know if I am. Once you get into Once you get into repayment, there's a lot of options. The standard repayment is 10 years, so 120 payments. There's a graduated one that's also for 10 years, but the initial monthly payment is lower, and then every 2 years it will increase for the 10 years. You can also do the extended plan. That applies to loans in excess of $30,000. And for those, you can stretch the repayment period out to as long as 25 years, which would be 300 payments. So those are the three general ways. There are also income-driven plans or income-driven repayment plans, and we'll go through those here in no particular order. There's the income contingent repayment, or ICR, which reduces your monthly payments to the lower of 20% of your income, or the payments you would have made on a 12-year payment plan. So whichever of those would be lower, you can pay those on the income contingent repayment plan. Parent loans can be consolidated under the income contingent plan, but those would be separate from your student loans, so your parents would have to do that on their own with their own loans. And after 25 years, income contingent repayment plans are eligible for forgiveness of the balance. Make sure I don't forget any numbers here. The next option is the IBR, or the income-based repayment, which reduces your monthly payments to about 10% of your discretionary income if the loans were taken out after July 1st, 2014, and to about 15% of your income if you took them out before that date. So yeah, July 1st, 2014. The monthly amount on the IBR will never be more than the standard repayment you would have been making on the 10-year plan. And IBRs, just like ICRs, can be forgiven after 20 years on loans taken out before July 1st, 2014, and after 25 years on loans taken out since then. There are a couple other payment options. One is called Pay, P-A-Y-E, which is pay as you earn. And this just reduces your monthly payments to 10% of your income, but never more than your standard payment amount would be. And these plans are available only for those who have borrowed after October 1st, 2011. Excuse me. And they can be forgiven, they're eligible for forgiveness after 20 years. Being eligible for forgiveness doesn't necessarily mean that that will happen, but that's when you can start to fill out the forms applying for that. The one that is similar to pay is repay, so the revised pay as you earn, and it also reduces your monthly payments to 10% or less of your income, but the payments can be more than the standard payment would have been on the 10-year plan, potentially. These are available for some of the people who weren't eligible for the pay plans, and they are eligible for forgiveness in 20 years for undergraduate loans and 25 years for graduate loans. And all of those different acronyms and things I just said, if you go to studentaid.gov, they have loan simulators that you can use to see which of those plans will work out best for you. And you can change in the middle. It's not always easy peasy, but you can change from one plan to another with the help of your servicer. So, okay, we will talk about the difference between delinquency and default. So going into delinquency starts on day one after you miss a payment, and that delinquency will reflect on your credit report. So if you're struggling at all, reach out to your servicer as soon as possible to try to make arrangements. After 270 consecutive days of delinquency, the loan goes into default. Defaulted loans are no longer eligible for forbearance or deferment. Your refunds and wages can be garnished. They can take you to court, and you can potentially lose any professional license you've earned. If you're taken to court, you would be obliged to pay probably the whole amount all at once, plus fees and penalties. So if you're struggling at all, reach out as soon as possible. In my personal experience, I've found my servicers, and I've had 2 or 3 over the years, they've been very amenable to work with. You just need to shoot them an email or even give them a call. So I mentioned deferment and forbearance. Deferment happens to your loans automatically, actually, if you're in school. If you're in military service, you can ask for a deferment if you have economic hardship or lose your job. And you can defer your loans for up to 3 years in total. If they're deferred, subsidized loans don't accrue interest, but unsubsidized loans do accrue interest at all times, all the time. Forbearance is a little different. You can ask for a forbearance if you're in financial difficulty, if you have medical expenses, if you changed employers, if you're in AmeriCorps or the National Guard, or even if you just have a heavy loan burden. There's no interest subsidy on loans in forbearance, so it does accrue interest. A forbearance is for up to 12 months at a time for a maximum of 3 years. So they're very similar, but they're not exactly the same. And while deferment is automatic when you are in school, enrolled in school, forbearance you have to reach out and ask for. You also have the option to consolidate. Whether you're in default or not, you can consolidate your loans into one so that you're just making one payment with one interest rate. The monthly payments might be lower and the term can possibly extend out to 30 years. But once you've consolidated your loans, there's no more grace period, so repayment starts right away. The last option for repayment is loan forgiveness. Generally, loan forgiveness is considered for death of the borrower, which obviously, if that's you, suddenly none of it is your problem anymore. But there's also the option of bankruptcy, total permanent disability if it happens after you took out the loans, closure of your school, or if the school falsified information to you, and any loans, of course, that are the result of identity theft. Those all can be forgiven. Teachers get a lot of options for loan forgiveness. If you teach full-time for 5 complete consecutive academic years in a low-income school or educational service agency, you may be eligible for forgiveness of up to $17,500 on your direct and federal subsidized and unsubsidized loans. And then everybody is very interested right now about the Public Service Loan Forgiveness Plan. This is available for people working full-time with local, state, federal, or tribal governments, as well as some not-for-profit entities. It's for direct loans, and those loans need to be consolidated beforehand. It requires 120 consecutive on-time payments, so 10 years of payments through one of the IDPs. The standard plan repayments are considered qualifying, but after 120 payments, you've paid those off anyway, so there's nothing left to forgive. So the consolidated loans, those 120 consecutive payments start after consolidation. So any payments you've made before consolidation, the clock is reset and you'll need to make 120 more. You're also responsible for giving them the annual paperwork to reapply for your plan and to make sure with your employer that you are a qualifying agency. And there's a form that HR here, for instance, is very well aware of, but your servicer can also make sure you have the right forms and submit them to the right people. The CARES Act, it's put a hold on repayment through the end of September 2021. So it's been a little over a year that nobody's had to make their student loan payments. And all of those months actually count toward your 120 consecutive payments for the purposes of the IDPs. So it's actually been a pretty nice deal. But we're not exactly sure when that's going to end. Right now it says it's going to end at the end of September, but they could extend it longer than that or make different changes. And that's the one thing I would say at this point is that everything I just told you is as of today. Current legislation and policy implementation may change at any time, especially with things like the CARES Act. But studentaid.gov, where you took out your FAFSA, they'll have the updated information in the most timely manner as anything changes. And you can reach out through them or financial aid to find out who your servicer is, and you can reach out to your servicer at any time with any problem you have and they'll help you out. And that's the whole show.
What happens if I'm in a public service loan forgiveness program and no longer meet the requirements of that, right? Like what if I left my nonprofit job?
Okay.
Do those
It's my understanding that the payments have to be consecutive, but I'm not entirely sure if they need to all be qualifying or if it's just that you need to be in good standing so that perhaps you could pick up another job that would also qualify. Unfortunately, that is the one thing I didn't do any research on before this, but I think that it just needs to be on-time payments and then 120 qualifying payments.
Okay. I know they're always, I mean, I feel like I have to call all the time and I'm like, remind me what I'm doing. So, yeah. Just trying to think. Thank you.
And I have found that they manually determine if these are qualifying payments. So sometimes it can be a few months before you'll see last year's payments reflected on your updated screen. So that's fun too.
Does anybody else have any questions?
I was gonna ask real quick. You had shared that, of course, right now they've delayed student loan payments. For anyone that's graduating this May, they would be on the calendar to have the 6-month deferment, correct? So for anyone that's in school right now, they might not be in that zone of getting other government deferment beyond just the typical one that they're in. Okay. Just double. Okay.
I just chimed in. Hi, guys. I do have a question about student loans.
Okay.
Are you guys referring to just the government student loans? This doesn't apply to private, correct?
Private loans are not usually eligible for the public service loan forgiveness or any of those payment plans, but the individual banks, individual lenders might have plans that you could reach out and talk to them as well.
Okay, thanks. I didn't know if you had touched on that, but I was just curious.
Yeah, private loans are they vary from each and every individual private lender, and they're not eligible for the federal programs, so yeah.
Okay, any other questions for Shacey?
And I'll put the links for things in the chat here in just a sec.
Awesome. Thank you. I just want to, like Shacey was talking earlier about how important it is to just stay in contact with your providers. I, early in my college career, when I took a break, made the mistake of just ignoring it. And I was a little too afraid to call them and contact them, which was a mistake. And I got very lucky because they were still, when I finally got around to doing what I needed to do, they were still very nice and accommodating, and they helped me figure out a way to get caught up. But don't wait. Please don't wait. I promise they aren't scary. They're not going to make you pay more than you can afford. You just have to contact them. And
they're not as scary as having your wages garnished or getting a court. So, yeah.
100%. Okay, well, if nobody else has any questions for Shacey, I'll go ahead and let her jump out, or you're more than welcome to stay if you want to stay and listen to budgeting.
I'm starving, so I'm going to go ahead and go get lunch, but thank you so much.
Yes, thank you again. I really appreciate it.
Sure. Bye.
Stephanie, welcome again.
Thank you.
We are recording this, just a heads up. We're going to post it on our YouTube later because we've had a lot of students that wanted to come but can't, so they're going to watch it at another time. But yeah, so this is Stephanie from UniWyo. She actually was with us last semester for Financial Lit event. Today she's going to talk about budgeting. And we will do, I know you're all anxious about the drawing. We will be doing that at the very end, I promise. Stephanie, since we've got a couple extra minutes for you, do you have anything you want to say about private student loans? Because that is not something that I'm familiar with at all.
I don't know a whole lot as far as beyond like my personal private student loans, but the credit union does have private student loans. We partner with student.
Oh,
You accidentally muted me.
I
That's
did.
okay.
I'm sorry.
You're good. So anyways, we partner with Student Choice, And our student loans are pretty cool. They work as like a line of credit. So you apply, and you can apply on your own or with a cosigner, and then you'll be eligible for a set amount of money, right? And then what you would do is you would take a draw from that each semester. So it wouldn't be a reapplication every semester unless maybe your financial situation changed or you needed to add a cosigner or a different cosigner or something like that. But otherwise, it's a one-time application and approval process. And then I do believe we do all undergraduate loans at a 4-year institution. So UniWyo, duh, University of Wyoming qualifies. And then we also can fund or loan out for business degrees, graduate degrees. And then I think the max that you can borrow, and I could be wrong, but I think it's $55,000. And that's also with a consolidation. So you can do undergraduate, graduate business loans, or consolidation. So, and I can't speak on our rates, but I know they're pretty competitive with the industry. They also, you can choose a variable or a fixed rate. And so sometimes that's really beneficial depending on maybe your income level, or if your credit isn't great and you need to like work on your credit or whatever, that gives you some flexibility. So yeah, I know I locked in a rate. I'm with a different lender because of my situation when I started my master's degree. The rate was so amazing that I went ahead and locked it in. But while I was going to get my master's, I'm just going to tell you this, I put my loans in deferment. And I would highly suggest not doing that if you were still working and able to pay them while you're in your master's program, because the amount of interest that accumulated on my loans that capitalized during that deferment cost the same amount of money as my master's degree. So, word of advice, if you are able to even make the interest payments, and you guys talked about your lender, reaching out to your providers, is during my grace period, I made payments. And I thought, oh, these are going great. Well, if you don't talk to them, and it depends on your lender, those payments go all to interest. So I made 6 months of payments, then none of it went to principal, and my anticipation was it all went to your principal balance. And I didn't clarify that because some institutions will put it all to your principal if you make an extra payment, some won't, and mine didn't. So that's another reason to talk to your lenders about your private, or even, I think federal student loans work a little different, but with private student loans, you definitely want to make sure you talk to your providers and figure out the best case scenario. And then also with those forgiveness programs, I was under the impression when I did consolidate after undergraduate school that private loans could be also considered forgivable in the public service realm, and they're not. So make sure that you're talking to your lenders and get all the information you can, and don't just assume anything. So there's my piece of advice on student loans. You're muted.
Oh, I was just saying thank you. Yeah, I wasn't familiar at all with private loans. Mine are all government. So that's helpful. Thank you.
Yeah, and when you do look into repayment and maybe consolidating, I would really consider keeping them either federal or consolidating to private based on your situation, your income, rates, and those things. And you might leave some federal and some private. So I would just definitely, and you could always talk to a financial aid counselor or a financial institution for some help on kind of figuring out what's the best way to do that. So.
Okay, so students, do you guys have your budgeting worksheet that we sent to you all handy? If not, I can email it to anybody who needs it really quick. Okay, I'm going to assume the lack of response means yes, I have it and I'm ready. So
Awesome.
We'll let Stephanie take it away.
Hey, you'll need to give me a host or screen share capabilities.
Yes, I can do that.
Okay. I mean, unless you guys really want to stare at me the whole time, but probably not.
All right, there you go. You should be set.
Okay, bear with me. I'm going to try to do this. I'm real bad at this, so let's see. I think I want to do this and say share, and then I want to start my presentation. Oh, you see note sides. Let me switch. I gotta switch screens. Sorry. Let me try again. I'm not very good at this. Okay, now let's try. What do you see? The presentation, not the notes? Okay.
Yes.
I apologize. My notes are on one screen. You guys see the other screen, so you're going to see a lot of my side of my face. I'm sorry. So anyways, thank you, Felicia, and all you guys for having me again. UniWyo loves to come in and work with you guys and give these presentations. And the best part is somebody's gonna win some money at the very end. Woo-hoo. So thanks for being here and just hanging out with me for 30 minutes. Money is not the funnest topic to talk about, but sadly, it's a reality. It's as important in our world as food. So if you don't have money, you're gonna live under a bridge. And if you don't have food, you're gonna starve. That's just kind of the reality of things. So I'm going to talk a little bit about money management, short, sweet, brief. So what is, uh-oh. Now it's not working. Oh, there it is. So what is budgeting? So a budget is keeping track of your income versus your expenses. So this would be something like your paycheck, or your student loans, or your stipend, your grant, those types of things. And then your expenses. So tuition, books, food, gas, rent, transportation. You also want a budget to meet personal financial goals. So in college, it's kind of hard to budget sometimes because maybe you work a part-time job and your hours aren't consistent. Or maybe you get the big chunk of money at the beginning of the semester and you have to figure out how to allocate it for the whole semester. Maybe you travel more in the warmer months to go home and this, that, or the other, or ride your bike more in the warmer months and don't have gas expenses. So it's really interesting budgeting in general. And so whether you're in college or out of college, whatever you're doing, it's good to also rework your budget. So anyways, it can help you meet some personal financial goals. You want a budget so that you can set up an emergency fund. I'm a big believer in if you're prepared, the worst won't happen. So even if you can set aside $500, that could cover maybe utilities or rent or a flat tire, those weird things that come up in case you lose your job or something happens. Budgeting helps you stay out of debt. It's easy to overspend if you're not paying attention. And then it also helps you plan for the future. If you get in the habit of budgeting and saving now, it just gets easier and kind of becomes second nature as you get older. And I'll tell you, these are the things that I wish I was told in college. I take that back. I probably was told these things in college and I didn't listen because when you're in your early 20s, you know everything. So take it for what it's worth, but I've been there. I get it. So on your worksheet, on the top part of your worksheet is goals. And the reason you want to set goals is, well, it's just good to set goals anywhere in life, but with money. So let's say, for example, you want to save $1,000 for summer travel expenses. That's very specific. It's very measurable and it's attainable. You're not being like, I want to make $1 million this year. That's probably not attainable. You want your goals to be relevant or realistic. And this means that it has to be important to you. So if you are saving money to buy a new car, but you ride a bike everywhere, like, is that really going to matter? Or if you're saving money for, I don't know, a new bow and arrow, but you're really not a hunter, like those aren't relevant goals. And so you're not going to do it. And they need to be time sensitive. You need to put an end date. Like, oh, I want to save money sometime is very vague. But if you're like, I want to save $1,000 by July 1st, it's very specific and it meets all of these SMART acronyms. On your worksheet, I have it broken down into the how, what, and why, or how, I can't remember. I don't have it in front of me, but that's a good way to break it out too, is like, what do you want to do and how are you going to do it? And then think about why you're doing it. Is it important? So you always want to keep in mind, and you may be like, I just want to save $5 a month, or I just want to build up a $500 emergency fund by the end of the year. I mean, those are very small and very attainable goals and a SMART goal to start. Or maybe one of your goals is, I don't want to spend more than $50 a month on pizza. You know, that's also a real, you know, you could have a backwards spending goal to where you don't want to go over your budget. So if you have any questions at any time during this, unmute yourself or raise your hand or do something, get my attention or put it in chat, and I would love to address any questions. So the next thing, on your budget, I'll go back to the budget, is on the bottom part is an example budget, and we filled some things in there that might be applicable to you as a college student. So things like your job, student loans, stipend, grants, rent, gas, those types of things. You can add anything that you need to on there. You might even want to put like a line for like pizza, like that's your pizza budget or whatever. But if you can allocate your money and know where all your money is going, you're less likely to overspend. If you have no idea how to start budgeting, you can track your expenses in an online banking platform or keep receipts and keep a tally of the way you're spending money. And then you can kind of backtrack and be like, oh, wow, like I ate out way too much last month, or be like, whoa, I could have extra money for savings. What am I spending it on? So there's two ways to look at it. You can plan ahead, or you can kind of backtrack. Or maybe if your paycheck is different from month to month, you can maybe pre-plan or save each month so that you have a little extra for the following month in case your paycheck is a little bit different. All right, another way to help with your budget is needs versus wants. So we live in Laramie. Well, I'm assuming most everyone's in Laramie, even though we're all remote. You need a coat here. It's stinking cold, but you probably don't need like a really expensive Columbia jacket if you can't afford it. That might be a want. So these are things that you can't live without, or needs. So like food, water, shelter, those basic things. And then wants are the things that you really, really would like to have, but maybe don't need. So an example I have is we all need to eat. And you may really want to go out to dinner, but it may not be in your budget, and you have peanut butter and jelly at home. Well, I guess PBJ it is, because that's what fits in your budget. It's not the best, but you're not going to starve to death. So you definitely want to evaluate this. And so this link, and I can put it in chat, or I can send it to Felicia to send on to you guys afterwards, is a great worksheet. And it helps you, like, you can write down all the things that you want or think you need, and then you can kind of grade them. Like, well, I really want this more than this, and then you can set the budget goal for those things to afford them. It might be the latest game for your gaming system, or it might be, who knows, I don't know of a good example, but it will help you kind of decipher what are my more heavily wants versus the ones that are like, I can kind of put those to a side for a while. And also your needs, like what do I need, and make those things a priority in your budget. So why is this important? Well, you want to know where your money's going. I don't know, I bet everyone can attest to this. You have $20 in your wallet, you go out for a day with the friends, and then you come home and you have like 2 quarters. You're like, what happened? You're like, well, I bought a pack of gum, and then I think I loaned my friend $1 for the soda machine, and then, oh yeah, that's right, I grabbed a pretzel at the mall, you know, and that money just, it's gone. So having a budget is a good idea, and then you see where your money's going, and you're not just spending it all willy-nilly, and then the next thing you know, you're like, oh crud, I don't have money for rent. So you want to be able to save for your future, or set those goals and those savings projected, or I can't talk, the saving projections. And you want to protect yourself from fraud. So this is a kind of, I didn't touch on this, but like if you have online banking, you want to keep track of where your spending is at, and watch that in case somebody gets a hold of your debit card number. You can track that in online banking. If something funky comes up, not only are you paying attention to where your money's going, now you can see if somebody else is spending your money, and you can take care of it right away. If that happens to you, contact your bank right away. Here at the credit union, we will reimburse your money to you. We will make you whole again, and we will fight Visa or whoever for you, because we don't want you to be impacted by that. Now, if we find out that it actually wasn't a fraudulent charge, you're gonna have to pay us back. But most people are pretty honest when it comes to that. And then you want to avoid situations where you have to rely on borrowing money or on credit. So if you're tempted to buy something and it's not in your budget and you really don't need it, put it as a goal, a savings goal. Don't go into debt or credit to buy it. So the reason we talk about credit, There are 5 factors of credit. Does anybody know what credit is? You can chime in on, raise your hand and talk or chat. Nobody? We're all asleep. Everyone's ready for lunch. All right. So 5 factors of credit. So credit is essentially borrowing something and paying for it later. So something like your utilities. You're getting heat and water for your apartment, but you pay for it after the fact. Your cell phone, you get a cell phone plan. Some cell phone plans you pay for after the fact. Sometimes some you pay ahead of time. Other things be like bank loans. You get a new car on a loan and you make the payments after you've received the car. Those are what credit is. So things that affect your credit are, do you pay on time? So I don't know if you guys know this, but your utility payments and your rent payments can affect your credit. So make sure that you're paying those on time. And I know that in the previous 30 minutes, they mentioned your student loans. Make sure you also paid those on time. And if you get in a situation where maybe your paycheck falls the day after your bill is due or something, call your lender, call your provider, work with them. People are willing to help you if they know you need help, but if you don't ask, they can't help. How much do you owe? Do you owe $1,500 on a credit card and maybe $10,000 in student loans? Not too bad, but maybe you got in trouble and you have like $20,000 on credit cards. Don't do that. That's a bad idea. So that also affects your credit, is how much you owe. How much have you had each piece of credit? So this would be like if you got a credit card right when you're 18 and you keep it open and you take good care of it. Those show a good, strong history of credit on your credit report. There are types of credit. Do you have a bunch of credit cards, or do you have a cell phone, rent, those types of things? Some credit affects your credit score more than others. Revolving credit, which is like a credit card, the more revolving credit you have tends to hurt your credit versus credit that you have collateral for, such as a car loan. And then how much new credit do you have? And you'll see this come up at the holidays all the time, is like, buy now, 0 interest, finance now, da 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 da, and that gets enticing. But when you go to get a loan, people are going to see that you've applied for other loans or have gotten other cards, and they're going to kind of wonder, like, why all of a sudden are you taking out all this credit? You know, are you going to borrow all this money and run to Mexico? Like, what's going on? So just be careful of that and be cognizant of how much you're borrowing and asking for if you don't really need it. You control all of these factors. So, and all these factors affect your rating. So just take care of your credit. One thing you can do is annualcreditreport.com. This is completely free. So those little jingles like Credit Karma and things like that actually ask you for a card number because they're going to charge you after your initial first check. So annualcreditreport.com is free. You're entitled to a free credit report once a year. This will show you everything that appears on your credit report. It does not give you your credit score, but you can see on your credit report and you can kind of decipher how well your credit is by looking at this. It's important to look at this once a year also to make sure, again, that nobody has stolen your identity. And if you ever have questions about this or your credit, always call a credit union or a bank. They should be able to help you. One thing I did want to talk about that I should have on the last slide is like you control your credit score, right? Or your credit. So in class, if you don't go to class and then you bomb an exam, are you just going to walk out of school? Probably not. You're probably going to talk to your professor and be like, hey, can I retake that exam? Or can I tutor? Is there extra study materials? And that's the same idea with your credit. If you mess up or you get yourself in a bind, talk to your lenders, talk to somebody that can help you out and take the next steps to make it better. So the reason we talk about it, and not to be like scary and boohoo woohoo, but credit can affect a lot of things that you do in your life. For one, your student loans, if you do consolidate them to a private lender, it can affect your credit, it can affect your rate. If you don't have credit or bad credit, you're going to be a victim of teaser rates and predatory lending. You can also get in trouble with teaser rates. Like I said, what's the next holiday coming up? We just had President's Day, so Memorial Day, and they're going to be like, more Memorial Day sale, 0% interest, whatever. Those are really enticing, but if you don't read the fine print, you can get in big trouble. If you don't make the payments or pay it off in the time that you're supposed to, you can get slammed with all of that interest at the end. So just be very careful of that. Avoid getting credit cards if you can. At the credit union, we have a credit builder credit card with a low balance, which can be a pretty safe way to get started on credit card use. We also have a low rate. But credit cards are okay to have as long as you're paying them off and taking care of your credit. They're good for an emergency, or sometimes people have a credit card to build points. Maybe you want to go on a trip somewhere and you want a United credit card so you can get United miles. That's all a personal choice, but just make sure you take care of it and pay it every month. Pay on time, avoid late fees. If you get in a situation, call your lender. And having good credit is a good thing, but having bad credit can really hurt you. So I can assume that everybody on this chat either wants to own their own home someday, or maybe is on their way to owning their own home. You can't do that with bad credit. The banks will not lend you the money. So just keep that in mind. I don't want to be boo-hoo-hoo-hoo about credit, but it's really easy to take care of it. It's also easy to get into trouble if you are not budgeting and paying attention to what you're spending on. So yeah, just like your GPA and your grades in school, just take care of it. Ask questions, seek help when you need it. We have financial counselors on staff at the credit union, and even if you don't bank with us, we will talk to you and we can help you out and answer some questions. So just keep that in mind. There's always people willing to help. So why does budgeting and keeping track of our money and credit and all that, why does that matter? Well, you don't want to be broke and live under a bridge, but I'll just give an example of credit scores. So here we have two different borrowers, credit score 720 and up, credit score 600 to 639. So you can see they bought the same, we'll say they bought a used vehicle, $18,000. Well, the better credit score got a better interest rate, 2.45 compared to 10%. They have the same term, 5 years. The payment for the better credit borrower is $320 a month versus $380 a month. Total interest paid $1,168 versus almost $5,000. So look at the big difference. Just by having good credit, over 5 years, the person with the A credit saved almost $4,000. So that may not be like, oh, well, it's spread over 5 years. That's not a big deal. But if you have that attitude with everything, you're going to spend a lot of money on interest, right? You don't want to do that because it will all add up. So we just ask you to this should really say be money wise. Track your spending, set savings goals, determine your needs versus your wants, and really pay attention, like the peanut butter and jelly example. Like, yeah, I'd rather eat out, but if it's not in my budget, I have food at my house I could eat. It's not as glamorous, but maybe that's when you say, okay, well, next month I want to budget for a nice meal out or save up for a nice new winter coat or whatever that may be. To build your credit, if you don't have credit or if you have hurt credit, you can take out a small bank loan and pay that back over the course of time. You can do a credit builder loan or credit card or share secure, which we have, and that essentially is you borrow against yourself, so you can't really get into a lot of trouble. And then when you have built your credit up and you've fixed your credit score or built your credit score up, we can release those funds to you or increase your limit. Find out from your landlords and your utility bills, are they reporting to your credit? And if they are, that's great, as long as you're making all your payments on time. If they're not, see if maybe they can, if it's something you're interested in doing to build your credit. If you have a cell phone, it might still be under your parents. Maybe it's time to break off from your parents and have your own plan and start building your credit that way. And then student loans. You guys talked about student loans before I got on, and it sounds like majority of you may have student loans or maybe be looking into those. Those help your credit. They don't necessarily hurt your credit until you miss a payment or you don't make a payment. Otherwise, they're just this weird black cloud that hangs out over here and doesn't really go away until you pay them off. But just be careful with your student loans. Don't borrow for things you don't need. I bought a nice new used truck when I was an undergrad, and I used my student loan money to do that. And that was not smart because I'm going to be paying student loans for a while. And I learned, A, not to spend more money on a vehicle than it's worth, and B, not to buy things and go into debt that I don't need. But that truck was fun, I will say. But don't do that. Do as I say, not as I did. So that's all I got. I think I zoomed through that. We have 10 minutes left. I'll just recap. So if you don't already have some sort of a bank account, which most people do, but if you're just a cash person, I would encourage you to get a bank account with a debit card and online banking so that you can track your expenses And a lot of financial institutions, especially at UniWyo, we have an app called Money Manager. And so the budgeting tools, the goal tools, and all that are right on the app. Like you can log into your phone and you can see it all. There's nice little graphs. You can set savings goals. Like I don't want to spend more than X amount of money at Pizza Hut this month. And it will tell you like, hey, you're getting close to your pizza budget. And you can categorize your spending in there. And so it makes it really easy to budget and stay on track. So if you don't already do any sort of online banking, I would encourage you to do that and look into it. Talk to your financial institution for some help on how to navigate that platform if they have a budgeting tool. If it's something you're interested in, the credit union, we have some incentives for you if you wanted to join the credit union. Manage that budget. Change it up as your income changes. You know, summer's coming up. Maybe you're going to work more hours. Maybe you're not. Maybe you're going to travel and you need to save for that and budget your travel over the course of a few months. Pay attention to your needs versus wants. Again, you may need flip-flop through the beach, but do you need like really expensive chacos to go on spring break or on summer trip? Maybe not. And take care of your credit. Just be wise about your money. Try not to overspend or borrow if you don't need to. There's a lot of things in this world that we do need to borrow for. I don't know anybody that has $25,000 just laying around to buy a new car. So you would, you would borrow for that. Or $50,000 to get your undergraduate degree. You need scholarships and loans and grants and things like that. So just take care of your credit, borrow for the things that you absolutely need, and not for the things that are just want and frivolous things. Like I didn't need a truck on student loans, things like that. And then come and see us at the credit union if you have any questions. Like I said, we have financial counselors on staff. Whether you're a member or not, we're always willing to help. We are in the mode of people helping people. One of our strategic goals and how we just live life is we want to educate people and help people out. So come see us if you have any questions. And then if you don't already bank at UniWyo, we'll give you $5. We'll put that first $5 in your bank account to get you started. And then we can set you up with free checking, debit card, online banking, that mobile budgeting app I told you about, all the great things. And then another cool thing, you got to find ways to make money and save money, right? That's our big goal here. Is if you already bank with us or you want to bank with us, you can do refer a friend. So you can find somebody that's a member and use their referral code, or give somebody your referral code and we'll give you both $5 when one or the two of you becomes a new member. So you get $55 for opening an account if you use a referral code. So that's what I got. So you can use this code GIVEME5 at uniwyo.com. You can talk to our contact center and be like, Stephanie told me I could get money in my account, or I listened to this presentation, or whatever, and we will put that first $5 in your account. If you do fill out the account application and you forget this, when they follow up with you, you could be like, oh yeah, I forgot to put that code in. So that's that. Do you guys have any questions? Oh, Gwen, are you raising your hand?
Yeah. First of all, thank you. I always enjoy your information that you share. I have two separate kind of questions, but wonder if you have a reference point for both. One would be, it's so hard to be able to tell, like, how does a utility bill affect a credit score? So could you give maybe just a general, if a person has a 670 credit score and they miss a utility bill, what's a typical ding amount?
Okay, yeah, that's a really good question. So it's really gonna vary. So if you were to miss a payment, utility payment, a cell phone payment, whatever, it really depends on when that company sends you to collections. And so when it gets to collections, that's when it's gonna ding your credit score. And I don't know by how many points. We played this little credit game on the internet, and it seemed to be like if you missed a payment, it dinged it like 10 points. But it really comes down to when it gets reported on your credit. So like, for example, at the credit union, you've got to miss several payments, and we're going to work with you to kind of catch up those payments before we send you to collections. And then once you're in collections, then it takes about 30 days to show up in your credit report. Now, if you miss a credit card payment though, it shows up on your credit report almost within 30 days. And so it can ding your credit right away. So it really depends on who the company is that you're working with and when they report to collections. In my personal experience and from what I've talked to other people, like especially with medical bills or on utility bills, if you get behind, if you work with them and as long as you're making payments every single month to get caught up, they're not going to send you to collections. Credit cards don't necessarily work the same way. Banks do. The credit union does in certain situations. So it really depends on the company. So my big piece of advice there is if you miss a payment or you get behind is to call and be like, like this pandemic kicked everyone's butts and, people lost their jobs and a lot of businesses were finding themselves like, all right, well, if you call and work with us, we're going to work with you. And I've been in a situation where I had really big medical bills and I couldn't make the minimum payment. There was no way. And I called and I worked with them and we agreed as long as I was making a payment every month that they wouldn't send me to collections. It took me forever to chip away at it, but I got it paid off. Had I not called and asked them about it, they would have sent me to collections and then I would have been screwed. So hopefully that answers your question. It really depends. Credit card, missing a revolving credit account payment hurts you more than missing any other type in my experience.
So that definitely builds a clearer picture because I feel like the credit score is its own set of numbers compared to everyone's in school and you're used to 0 to 100 and then all of a sudden, a credit score of 742. Great. Where did that number come from?
Right.
So it's just a different,
That
it's
is
not on the 4.0 scale.
No, it doesn't. Yeah, it doesn't make sense. And there's 3. There's Experian, Equifax, and TransUnion, and they all report a little bit differently. And so like your landlord may only report to one of them. And so your credit score, from a bank, because we pull from all 3, is kind of sometimes an average of all 3 of those.
Yeah.
And like my husband and I will joke with each other, like his might be higher on one of the people's and mine's higher on the other one. And then we're like, why is that? And we kind of get in a little, marital, not spat, but it's fun to kind of see that. So it can vary and it's this like mystery. It's like the galaxy. Like, we don't know why it does what it does, but just stay on top of it, stay ahead of it. If you have questions, our financial counselors could answer that a lot better. Things that have collateral tied to them, like a house or a car, those don't hurt as much because they can come and take that away from you to recoup those losses. So keep that in mind too. If you have a car and you're missing your payments, the repo man's going to come. So you don't want that to happen. Or like with utilities, they could just turn off your water, or turn off your gas. They can stop you from getting in more trouble, where with credit cards, you can keep spending. They don't really ever stop you.
And Stephanie, I don't know if you have this readily available, but I was really thankful to see they have the posters up in the union about the financial wellness newsletter that UniWyo is sponsoring.
Yes.
Would you be willing maybe just to forward to Felicia where we could send that out again to students who I think great information would come their way if they take advantage of, logging in with that. Awesome.
Yeah, I will definitely send that. I don't know. So we actually wrapped up Financial Literacy Month last night with Colin Ryan. But if you guys want to check it out, if you visit the ASUW Facebook page, everything that we've done with them in financial wellness this past month was recorded. And there's some really great content out there. I'd also encourage you all to visit the financial wellness website. If you go to UniWyo and the A to Z directory and go to financial wellness, there's a ton of really great resources. There's even a link to an Excel sheet a really, really robust budget sheet. It's a little overwhelming for me personally, but it's out there. But yes, so with that said, I don't know if they're going to continue the financial newsletter beyond, but I will get in touch with them and at least maybe we can send the past copies to you guys to forward on so that content is there. Oh, yep. So anything else?
If there's no other questions, I put everybody's name into the random name generator and I have a winner if you guys are ready.
Ooh.
Okay. I can't do the drum roll sound, so it was Jay. So yay, Jay. You win $50.
Is there only one J on here?
Yes. Yeah,
just
Jay
wanted to give-
Wells. You're good.
You gotta be like, bingo! Woo! Like it's lunchtime. I'm hungry. Jay Wells, do you want to pop your phone number or email? Actually, pop your phone number in the chat to me privately, and then I'll call you and we'll just get the money directly to you and not go through the third man stuff. Sound good?
Allison, I just had a student ask if we have a QR code for this.
Yes, we do.
Okay,
Hey, this is the QR code.
See if I can find it. Thank
Allison
you.
will share that on the screen. Thank you, Simona. Simona, I hope I said that right, for reminding us, because we are horrible about remembering that.
Because I'm still learning SOAR.
And
What does that
congratulations,
stand
Jay.
for? The SOAR acronym.
That's a good question.
Oh.
I think it's a long one.
Students, something, something, and something.
I don't know. I just curious.
No, don't know.
I can only find the old ones. Hold on, I think I know where I saved them.
Yeah, we did all the QR codes for Financial Literacy Month. So that's kind of fun.
Yeah, we're still getting used to the SOAR. It's kind of new to us.
Okay. Okay. Can I share my screen?
Yes, you should be able to.
Can you see the QR code?
All right, there we
There
go.
it is.
Whew.
Good job, Allison.
Thanks for reminding us. There it is.
Okay, any last minute thoughts or queries before we wrap up? Nope. Okay. Stephanie, thank you again so much for coming. Did you get Jay's information? Okay.
Jay and
Awesome.
I had a little chit chat on the side, so we're good. He's
Excellent.
$50 richer. So if you guys need pizza budget, ask Jay.
Jay's our pizza supplier for the month. Awesome.
There you go. Thank you so much, Felicia, for having me. It's always a good time. So I
Yes.
look forward to the next time. And maybe
Yeah.
we can be in person.
That would be amazing. Yeah.
Yeah, fingers crossed.
Okay. Thanks, Stephanie.
Bye-bye.
Bye.
Congrats, Jay.